Good evening and welcome to the Equity Axis Earnings Review. My name is Desmond Tefuma, but you can call me Dollars Des. On the show, we dive deep into company financials and operations and come up with top-notch analysis to serve you with the right information to help you make wise investment decisions or to simply serve your curiosity. We also talk with top executives and put them under the spotlight, as well as the most revered financial analysts to help us make sense of some issues. In the books tonight, we have Turnall Holdings. Turnall produces and markets materials for the building and construction industry in Zimbabwe. The company operates in a number of segments: building products, which include ceiling boards and roofing sheets, partitioning and fascia boards, flash sheets, and ceiling molds; piping products, which include water and sewer reticulation pipes; and concrete products, which include roof tiles. The company also produces a line extension range that includes Turnallware, flower pots, and garden decor products, Nutec non-asbestos sheets, and Spanish pavers. The fiber cement division targets the low-income housing sector, local authorities, and municipalities through two divisions: Turnall Building Products and Turnall Piping Products. Turnall has distribution outlets in Zimbabwe, South Africa, Mozambique, Zambia, and Malawi. We now take you to an earlier conversation we had with the Managing Director, Mr. Ziggy Bikwa, and Financial Manager, Mr. Caleb Chimene. Enjoy.
Equity Live presents the complete online interactive presentation solution. Hosting AGMs, media and analyst briefings has never been this simple, efficient, and affordable. Communicate globally through a combination of high-definition video and your prepared multimedia presentation from any location of your choice. Interact with your invited participants from all over the world in question and answer sessions and voting sessions in real time on our safe, secure, and affordable platform. Contact Equity Live for a free customized demonstration. Equity Live, real-time presentation solutions.
Once again, thank you so much, Mr. Ziggy Bikwa and Mr. Caleb Chimene, for welcoming us into your corporate home and allowing us to do this interview on the back of your half-year results for the half-year ended 30 June 2021.
Correct. Okay, thank you.
Thank you. I want to jump straight into it. First of all, I want to talk sales volumes. Your sales volumes grew 21% in the half, coupled with a revenue growth of 52%. This is significant of a growing demand, we can tell. So in your view, I'll start with Mr. Bikwa. In your view, what are the particular drivers for this demand that we're seeing in this half to 30 June, given the COVID, given lockdowns, but still sales volumes are up there?
The starting point is we reconfigured the route to market, how we distribute. We restructured our sales team, have a footprint in each province, have a representative of Turnall in each province, a person who checks or manages the key customers on a daily basis. And that made the significant impact in the presence of the product and the product being available. Coupled with that was the supply chain. We made sure that we had all the raw materials available to stock up the customers, and then made sure that there is continuous supply of the product into the market. And I think the most significant is the quality that has improved. Over the years, we used to have the challenges of the quality coming from all facets of the production processes, and that we continue to improve on. I think the customers are starting to see that, and it's now also starting to pay the dividends, having confidence in the product and having the product available.
A stellar performance. We also realized that profit in historic terms grew by 430%. But however, in inflation-adjusted terms, we see a slump of 36%. Can you walk us through that particular dynamic?
Okay, I'll start with the inflation-adjusted percentage. That's, I think in the brief is 49% of our revenue comes in in US dollars, which is the proper currency, and then we have RTGS, which contributed 51%. But the suppressing of the revenue was because we now multiply that 49% in US dollars against the revenue of US dollars. So the US dollars were taken at an official rate.
So 85.
Yes, at 85. But your cost of sales, the inflow of the products that come into the production system, are pegged at open market rate. So the difference now becomes a challenge you want to manage. But that's why we now base all our financials in US dollars. Now, if you look at in US dollars, our profit moved by 95% because you're comparing like for like. Now, when you compare other TGS US dollars, yeah, you have that distortion. It's because the prices of declaring revenue within the legal means is 85%, so the 85 rate. But the inflow of the raw materials that comes into the processes is at an open market rate. I'll give you an example. If you have $1, it's called 85 RTGS. Yes. Now, when you go and buy a loaf outside and you pay, the guy will ask you for $110. So the mathematics is already off. So that's what happened with the 36% slump. And if you look at prior year, the rate between the official and the open market was small. I think it was 25 versus 25 or somewhere there. That's when they were starting to regularize the auction market. So the rate was 1:1, or like 25 at the official, and in the open market was 25. But now the disparity has moved. It's 85 against, no one knows how much it is now. 120, 150, I don't know.
Sure. So we'll move to Sir. We see that export sales grew by 3%. This was after they'd fallen by 43% in the year ended 31 December. Is there perhaps a strategic reason behind that, or is just also a matter of demand in the export market?
Okay. Thank you. It's just like the MD just alluded to. We are focusing on re-strategizing how we are running the business, both on the local market and also on the export market, because the export market, that is where the life of the business lies in terms of foreign currency generation. We really need that money because we import a lot in terms of our raw material, that's the fiber, in terms of the space. So we need to ensure that the export is performing. Yes, the demand is there, and we were working on making sure that we actually grow the export volumes further going forward.
Okay. On the same note, I want to talk about your imports. You mentioned that you import quite a number of raw materials needed for operations. But at the same time, we are hearing the Monetary Policy Committee came out a few days and said there was a backlog in terms of the foreign currency auction. How have you been able to navigate sourcing of foreign currency for your imports against this backlog? Is there any alternative means of he did say that 49% of your revenue is in US dollars, but what about, is that enough for the importing operations, or do you have to go a step further, and how has the backlog in the forex auction affected that particular facet of business?
Okay, thank you. As a business, during the first half of the year, we've been funding our import payments using our own resources. I think from the sales mix that we've talked about, where we are saying 49% of our money, that is what we are generating local. That one we are channeling it towards the payments for foreign payments, so that we ensure our plants do not stop. We always have enough raw material on the ground as well as the space. So in terms of funding, for now, for the first half, we've been funding that on our own, using the monies, the USD that we are generating locally, and also from our exports.
Ziggy, you talk about capacity expansion in your outlook for the year and even further. What particular projects have been put in place to expand the production capacity of Turnall? We're looking at the recent results that you just put out today. We see that production was at 28%, sales were at 21%, and you did say that you are producing the hand-to-mouth kind of setup. What particular projects are in place to create a production gap, a production sales gap?
If you look at the sales mix and the production processes, currently we are selling 91% of what we produce. So the gap is 9%. And that, in advent of a breakdown, the challenges could be catastrophic. So what we're going to do is bring in a new plant in Harare, which is double the plant that is currently operating in Bulawayo, which does 10 tons a day. And the new plant will be doing between 16 and 20 tons per day. Coupled with that is the diversity of the product mix that comes out of that plant. If you look in Bulawayo, the plant that we have, when we're producing for local product, we switch off the new tech plant. Vis-a-vis when we're also making the export. So we're making for the export, we switch off for the local. So the one that's going to come is versatile. It can run parallel, the two plants. So you'll have that, maneuver to switch on to whichever product you want to make. But we're also wanting to diversify the product portfolio. I mean, I think we have been in the era where you have 10 tons of concrete tiles on top of your roof. The new technology, the new global trends means you need less tonnage on top of your roof. So you are slowly going to move away from the concrete tiles into new, efficient, cost-effective roofing solution. You will have your eco tiles, you will have your slates, pan tiles, and those are the new things that are coming onto the market, back into the market. If you look in Europe, they use slates, and slates are cheaper. You use less timber, and where a normal house, when you build a normal house, you need 4,500 concrete tiles, but the new one is going to need 4,000, so it's less than 3,000, about 1,500, and you lose less timber, half of the timber, because it's no longer heavy. And you're no longer required to do a 230 millimeter hole. You can do a 115 millimeter hole. So that's the change in the product portfolio that we envisage with the new plant that's coming in. So that's the expansion we wanted to make. And on the exports is the 3%. If you look at the 3%, is we're suppressing the demand. Because we cannot meet their demand is because our local upstage also has gone up. So now when we switch off the plant, which is the new tech that makes the export product, the exports are suffer. So that's the uptake we need to start doing, and the new plant comes in.
So we are also able to see stellar performance, and you have also declared a dividend of 3 cents per share. The first time you've declared a dividend since 2007, which is 14 years now. Can perhaps Caleb walk us through that, what the particular developments behind the declaration of the dividend?
Okay, thank you. If you look over the years, Turnall has not been performing very well, and it was going through stages in terms of the turnaround process. But if you look at this year alone, this half year, we have performed exceptionally well, regardless of the effect of the COVID. We were on lockdown first 2 months, January, February, movement of product to customers from suppliers, it was limited. So we performed very well, and also in terms of the cost alignment, we have done very well in terms of cost alignment. That was the major focus of management. That resulted in that profit, that the USD that we spoke about, the 90% increase in profit, and that the declaration of the dividend, as much as it is in Zim dollar, but it's backed by the USD, because we are saying we have out of the turnover that we have generated during the period, with the 49% almost half. So that performance is backed by a stable currency. So this year alone we have performed well, and that is worth declaring a dividend as a thank you to the shareholders, the confidence that they have shown to us, to the management, the board over the years. Because it's a long time, from 2007 now it's 2021. So it's a worth. It's a huge milestone for Turnall, yes.
It speaks to improving business.
Yeah.
Okay. Lastly, perhaps to you, Mr. Caleb, can you walk us through your outlook for the year? How do you see your performance? This was for the half year. how do you see your performance at the end of full year 2021? What can we expect from Turnall in terms of sales, in terms of revenue, in terms of general performance? What do you see in your view on the back of these results that you just released?
Okay, thank you. Usually, if you look at our business cycle, the first half, normally the performance is low because of the nature of our business. We are into construction, so the business will be very low. So given that we've managed to go that far up to half year, then as we go into the second half, we should be able to double that. The performance that we've achieved in the first half, as we go into the second half, we should be able to double whatever that we have done because that's our peak period. That is where most of the people will be constructing. That is where our demand will be, that the upsurge in demand will go up, and we expect more revenue, and also we expect more profit during during the second half.
Indeed, the second half is usually a very high spending half, so we expect even better results coming in the second half. True.
We've also resuscitated the pipe plant.
Yeah.
I'm sure you know the pipe plant in Blower has been closed for what, a year now?
Yeah.
So we resuscitated that, and that will add onto the next half. And that pipe plant is going to do your water sewer reticulation. I'm sure you have noticed building all over the places. And those places will need the sewer and water reticulation. And that demand is, the reason why we opened it up is that demand has already started coming in. And we need to fulfill those orders, fulfill that obligation. And I think it's only Turnall that can supply that sewer and water reticulation pipe.
On that same note, what is the production capacity of this pipeline plant that's in Bulawayo?
Currently it does, in tonnage terms, is 30 tons per day. And we have, during the refurbishment period of the last 2 months, we're going to up it by another 15% to 36%, 36 tons a day. And from where we sit in the order book is, I think, in terms of pipes required, in value terms, without mentioning the names, I think we're sitting at about $2.5 million, the orders that needs to be delivered based on that pipe, the pipe reticulation that is required in the next 2 months. Yeah.
Box standard. So from as we wrap up from the both of you, there's been rather shifts and changes in management at Turnall. New management coming in, changes being made. What is the strategy? What is the managerial strategy from henceforth? What can we expect to see done differently within the managing structures of Turnall, within how everything is carried out?
I think, the structure is, when there's a new management, you come in with a different vision.
True.
And a different vision.
And
that different vision sometimes require a different person to move the cheese.
True.
Because you also don't want to say, no, this is what we used to do, this is what we used to do. So the change is, it's coupled with the restructuring to say, what do you need to put in place? Which areas do you need to improve on? Which areas do you need to restructure? And align the whole business concept with the vision. But in terms of restructuring, it was just to align the business from where it was, the capacity. I think you spoke about the cost containment. Because if you look at last year, we were running 3 days a week, 2 days a week, 4 days a week. I think the beginning of this year, we have not stopped production simply because there is a problem. No, it's because we have the demand, and the influence that we wanted to make in the market has to be backed by the production. So in a change of management, a different vision, a different management, and a different pieces that you place around, to make sure that you execute that vision. Remember, all these MDs have got a certain mandate to deliver in a certain period, and that does not stop from Turnall. I think the board and the shareholders still demand that, and that's what we have to deliver, the value.
I think you've pretty much covered it. Thank you so much again, Mr. Caleb, and thank you so much again, Mr. Ziggy, for welcoming us into your corporate home and having this conversation with us.
Thank you.
Pleasure.
You're welcome.
Thank you.
And there you have it. Make sure to follow, like, and subscribe to our social media pages at Equity Axis on Twitter, Facebook, and YouTube, and also to read our informative website www.equityaxis.net. Until next time, ciao.